When I replied to a new investor in our meeting that we don't promise any returns on an investment in the Sifter Fund, Sifter's sales directors nearly choked on his coffee. Well, understandably, the investor wanted to know what kind of returns we could offer him in the future. He had looked into the history of the fund and was convinced of our strategy and returns. While my response may have seemed a bit harsh, it's the only thing I can say about the future returns. We don't know them, and neither does anyone else. In fact, most studies suggest that funds' past performance doesn't correlate with future performance. However, there's evidence that a small group of investors can systematically identify excellent companies and earn excess returns from the market. For example, Peter Lynch and Warren Buffett have managed to do this. Well, we hope that Sifter investment process and strategy honed over 20 years belongs to this small group. Well, what can we promise to our investors? Our promise at Sifter is that we seek, analyze and invest in extremely high-quality companies worldwide. Our promise can be easily understood when we look at the business metrics of the companies we own and compare them to the, for example, S&P 500 companies' numbers. The S&P 500 has historically provided strong returns, just like Sifter Fund. But what differences do business quality metrics reveal? A table shows that the median business metrics of the companies in the Sifter Fund. As a Sifter investor, you can think of owning a company whose metrics are shown in the table green. The Sifter Fund's companies are growing faster, with hefty margins, and more profit is left at the bottom line. Also, Sifter companies have successfully invested in their own business operations. A high return on invested capital of 22% indicates that these companies have been able to make their profit produce better than companies in S&P 500 index on average. Well, in addition, Sifter companies are average debt-free also, unlike S&P 500 companies, which have nearly 2 times EBITDA worth of debt. As a Sifter investor, you own slightly more expensive but significantly higher quality operations than the average S&P 500 company. The question is, which group of companies do you think will perform better in the future? Over shorter periods, the price of stocks will move above or below its business value, depending more on emotions than economics. Therefore, I think it's pointless to guess changes in the stock market. However, we believe that in the long term, the price of a stock reflects its value, in other words, the ability to make money in the future, which is of course a result of quality of its operations and growing business. And that's why we focus on finding quality companies for the Sifter portfolio. And it is our promise to our investors. Thank you very much.